Hi guys. So in this video we'll talk about the Fibonacci sequence, which is a series of numbers in which each number is the sum of two preceding numbers starting from 0 and 1. The sequence goes like this: 0 plus 1 equals 1, 1 plus 1 equals 2, 2 plus 1 equals 3, and so on. It was first described by Leonardo Fibonacci, an Italian mathematician from Pisa, in the early 13th century, although it had been previously described in Indian mathematics. The Fibonacci sequence has many interesting properties and appears in various areas of mathematics, science, and nature. Okay, so we can continue to trading. Fibonacci retracements are used to identify potential levels of support and resistance in an asset's price movement by dividing the vertical distance between a high and low point on a price chart by the key Fibonacci ratios, which are 23.6%, 38.2%, 50%, 61.8%, and 100%. Fibonacci extensions are used to estimate levels at which the price of an asset might find resistance of support after a price move has occurred. To use Fibonacci retracements in a chart, you would first need to identify the high and low points on a chart between which you want to apply the retracements. So we can identify them here. I will use the yesterday's setup. So we will take the high from yesterday, apply it here. In this case, yesterday's high was here, the low was here, and we can see when we dropped from the weekly average down, we touched the 0.786 line and we went up. Once you identified these points, you can plot horizontal lines at the key Fibonacci levels between the high and low points. These lines can be used as potential levels of support and resistance for the price and assets you're analyzing. For example, if an asset's price moves from a $100 to a $150 and you want to apply Fibonacci retracements to this move, you would first plot a line from the high point at $150 down to the low point at $100. Then you would plot horizontal lines at the key Fibonacci levels calculated as a percentage of a vertical distance between the high and low points. In this case of Fibonacci extensions, you would first identify a price move and then measure the size of that move. You would then add or subtract the size of a key Fibonacci level to estimate future levels of support and resistance for asset's price. It's important to know while many traders use these tools, the reliability as standalone indicator is subject of debate and they should not be solely relied upon making investment decisions. It's always wise to use a combination of technical and fundamental analysis and keep an eye on other market variables. That was everything, so make sure to like and subscribe. Hope this helps in any way, and that's it. Thank you. Bye.